The story of blockchain begins with Bitcoin, a revolutionary digital currency that emerged from the depths of the 2008 financial crisis. Bitcoin, created by the pseudonymous Satoshi Nakamoto, promised a decentralized and transparent alternative to traditional financial systems, capturing the imagination of early adopters and sparking a wave of innovation that would forever change the technological landscape. What started as a niche experiment quickly gained momentum, evolving from a digital curiosity to a global phenomenon, as more and more people recognized the transformative potential of blockchain technology. Fast forward to today, and the blockchain ecosystem has exploded in both size and complexity. From its humble beginnings as the underlying technology for Bitcoin, blockchain has evolved into a sprawling network of interconnected platforms, applications, and communities. Thousands of cryptocurrencies have sprung up, each with its own unique features, use cases, and communities of supporters. The once barren landscape of the early days has transformed into a bustling digital metropolis, with new projects, ideas, and innovations emerging at a breakneck pace. This rapid expansion is reminiscent of the California gold rush of the 1850s, where the discovery of gold sparked a massive influx of prospectors, entrepreneurs, and dreamers, all eager to strike it rich. Similarly, the rise of blockchain has ignited a digital gold rush, attracting a diverse cast of characters, from tech visionaries and coding wizards, to savvy investors and speculative traders, all drawn to the promise of decentralization, disruption, and potentially immense wealth. However, just like the California gold rush, the blockchain boom is not without its share of risks and challenges. For every success story, there are countless tales of failed projects, scams, and broken dreams. The decentralized nature of blockchain, while one of its greatest strengths, also makes it a breeding ground for fraud and speculation. Navigating this complex and often volatile landscape requires a keen eye for opportunity, a healthy dose of skepticism, and a deep understanding of the underlying technology and its potential pitfalls. One of the most captivating aspects of the blockchain revolution is the sheer diversity of projects and applications it has spawned. From cryptocurrencies like Bitcoin and Ethereum, which aim to revolutionize the way we think about money and finance, to non-fungible tokens which are transforming the worlds of art, collectibles, and digital ownership, blockchain technology has become a breeding ground for innovation, creativity, and sometimes, outright speculation. Cryptocurrencies at their core are digital tokens that represent a store of value on a blockchain network. Bitcoin, the original cryptocurrency, remains the most well-known and widely traded, but thousands of other cryptocurrencies known as altcoins have emerged, each with its own unique set of features and potential use cases. Ethereum, for example, goes beyond Bitcoin by providing a platform for decentralized applications, enabling developers to build and deploy everything from games and social networks to prediction markets and decentralized finance platforms. NFTs, on the other hand, represent ownership of unique digital assets, such as artwork, music, or even virtual real estate. NFTs have exploded in popularity in recent years, with artists, musicians, and collectors flocking to this new medium to create, sell, and trade digital assets in a way that was never before possible. The rise of NFTs has blurred the lines between the physical and digital worlds, challenging traditional notions of ownership and value in the process. This explosion of innovation has led some to describe the blockchain space as the Wild West of decentralization. Just like the American frontier of the 19th century, the blockchain ecosystem is a place of immense opportunity, but also one with inherent risks and uncertainties. The lack of centralized control, while empowering for some, also creates opportunities for fraud, scams, and market manipulation. Navigating this dynamic and often unpredictable landscape requires a healthy dose of caution, a willingness to embrace experimentation, and a deep understanding of the underlying technology and its potential pitfalls. Building the future, the developers behind the blockchain boom. Behind the scenes of the blockchain revolution is a vibrant and growing community of developers, engineers, and entrepreneurs who are working tirelessly to build the future of decentralized technology. These individuals, often driven by a passion for innovation, a belief in the transformative power of blockchain, and a desire to create a more equitable and decentralized world, are the unsung heroes of the blockchain boom, dedicating countless hours to writing code, building platforms, and pushing the boundaries of what's possible with this revolutionary technology. The blockchain developer community is a global phenomenon, with talented individuals from all walks of life contributing to the advancement of this technology. From seasoned software engineers with decades of experience to self-taught coders just starting their journey, the blockchain space welcomes individuals with a diverse range of skills and backgrounds. This open and collaborative spirit is one of the defining characteristics of the blockchain community, fostering an environment of shared learning, experimentation, and innovation. Building blockchain applications is not for the faint of heart. It requires a deep understanding of complex concepts such as cryptography, consensus mechanisms, and smart contracts, as well as a mastery of programming languages like Solidity, Rust, and Viper. Blockchain developers are constantly pushing the limits of what's possible with this technology, building everything from decentralized exchanges and lending platforms to supply chain management systems and digital identity solutions. The work of these developers is essential to the continued growth and success of the blockchain ecosystem. They are the architects of the decentralized future, building the infrastructure and applications that will power the next generation of the internet and beyond. Their dedication, creativity, and unwavering belief in the power of blockchain are shaping the world around us, one line of code at a time. The allure of blockchain technology, with its promise of decentralization, transparency, and financial empowerment, has attracted a diverse cast of characters, from idealistic visionaries to opportunistic grifters. While countless individuals and teams are genuinely dedicated to building a better future with blockchain, the unfortunate reality is that the space has also become a breeding ground for scams, fraud, and market manipulation. This dark underbelly of decentralization, often hidden beneath the surface of hype and excitement, poses a significant challenge to the mainstream adoption and long-term viability of blockchain technology. The very nature of decentralization, while one of blockchain's greatest strengths, also creates unique opportunities for malicious actors to exploit the system. The lack of centralized control, which empowers individuals and fosters innovation, also means there are fewer safeguards in place to protect users from fraud and abuse. This inherent vulnerability is further exacerbated by the relative complexity of blockchain technology, which can be daunting for newcomers to understand and navigate. This knowledge gap creates fertile ground for scammers, who often prey on individuals who are new to the space and eager to capitalize on the latest trends. The financial incentives for blockchain-based scams are enormous, as the value of cryptocurrencies can fluctuate wildly, and the decentralized nature of these assets makes it difficult to trace and recover stolen funds. Scammers have become increasingly sophisticated in their tactics, employing a wide range of strategies, from elaborate phishing schemes and fake ICOs to pump and dump schemes and malicious smart contracts. The rise of decentralized exchanges, while offering greater privacy and control over users' funds, has also provided new avenues for market manipulation and fraud, as these platforms often lack the same level of regulatory oversight as traditional centralized exchanges. The prevalence of scams and fraud in the blockchain space has a corrosive effect on the entire ecosystem. It erodes trust in legitimate projects, discourages new users from entering the space, and slows down the mainstream adoption of blockchain technology. Addressing this challenge requires a multi-pronged approach, involving increased education and awareness among users, improved security measures by developers and platforms, and greater regulatory clarity and enforcement from governments around the world. One of the most common and devastating forms of blockchain scams is the infamous rug pull. This malicious tactic, which often targets unsuspecting investors in new or lesser-known cryptocurrency projects, involves the creators of a token artificially inflating its price before suddenly abandoning the project and making off with investors' funds. Rug pulls are a stark reminder of the risks inherent in the unregulated and often volatile world of cryptocurrencies, and they highlight the importance of due diligence and caution when investing in this space. The anatomy of a rug pull typically follows a predictable pattern. It often begins with the creation of a new cryptocurrency token, usually accompanied by a slick website, a compelling white paper, and an aggressive marketing campaign across social media platforms. The creators of the token will often make grandiose promises about its future value, leveraging the hype and FOMO, or fear of missing out, that is prevalent in the cryptocurrency space to attract investors. They may even go so far as to create fake trading volume and manipulate the token's price on decentralized exchanges to create the illusion of organic growth and demand. Once the token has gained sufficient traction and investors have poured their funds into the project, the creators will suddenly withdraw all the liquidity from the market, causing the token's price to crash to zero. Investors who bought into the hype are left holding worthless tokens, while the scammers disappear with their ill-gotten gains, often leaving behind little more than a trail of broken promises and shattered dreams. The decentralized and pseudonymous nature of blockchain technology makes it extremely difficult to track down the perpetrators of rug pulls, and even if they are caught, recovering stolen funds is often impossible. Protecting yourself from rug pulls requires a healthy dose of skepticism, a commitment to thorough research, and an understanding of the warning signs. Be wary of projects that make unrealistic promises, lack transparency about their team and technology, or exhibit artificial trading volume or price movements. Diversifying your investments across multiple projects, only investing what you can afford to lose, and using reputable exchanges and wallets are also crucial steps in mitigating the risk of falling victim to a rug pull. Beyond rug pulls, the many faces of blockchain fraud, scammers are constantly evolving their tactics, exploiting vulnerabilities and preying on unsuspecting users in a myriad of ways. From phishing attacks and fake websites to malicious smart contracts and pump-and-dump schemes, the landscape of blockchain fraud is as diverse as it is dangerous. Phishing attacks typically involve scammers impersonating legitimate entities such as cryptocurrency exchanges or wallet providers to trick users into revealing their private keys or login credentials. They may send out emails or text messages that appear to be from a trusted source, containing links to fake websites designed to steal users' information. Once scammers have access to a user's private keys or login details, they can drain their wallets and disappear with their funds. Malicious smart contracts can also be exploited by scammers. These contracts may contain hidden vulnerabilities or backdoors that allow attackers to steal funds, manipulate data, or disrupt the functionality of decentralized applications. In some cases, scammers may even create entire projects around malicious smart contracts, luring in unsuspecting users with the promise of high returns before draining their investments. Pump-and-dump schemes involve artificially inflating the price of a cryptocurrency token through coordinated buying activity and misleading information campaigns. Once the price has been pumped up to a certain level, the perpetrators of the scheme sell off their holdings at a profit, causing the price to crash and leaving unsuspecting investors with significant losses. The decentralized nature of many cryptocurrency exchanges and the lack of regulatory oversight make it difficult to prevent and prosecute pump-and-dump schemes. Users must remain vigilant and informed to protect themselves from becoming victims. Blockchain's highs and lows, from life-changing gains to crushing losses. The blockchain space is a land of extremes, where fortunes can be made and lost overnight. For every story of life-changing gains and rags-to-riches transformations, there are countless tales of scams, rug pulls, and investments that evaporated as quickly as they materialized. This inherent volatility and risk are inseparable from blockchain's decentralized and often unregulated nature, creating both opportunities and pitfalls for those who dare to enter this digital frontier. One of the most compelling examples of blockchain's potential to empower individuals and communities is the story of Axie Infinity, a blockchain-based game that took the world by storm in 2021. Axie Infinity, which allows players to earn cryptocurrency by breeding, battling, and trading digital creatures called Axies, became a lifeline for many people in developing countries, particularly in the Philippines, where it provided a source of income during the economic downturn caused by the COVID-19 pandemic. At its peak, Axie Infinity boasted millions of players worldwide, with some earning more from the game than from their traditional jobs. However, the game's success was short-lived. As the hype surrounding NFTs and play-to-earn games subsided, and as the value of Axie Infinity's in-game currency plummeted, many players saw their earnings dwindle, highlighting the precarious nature of blockchain-based economies and the risks associated with investing in volatile digital assets. The NFT art market provides another stark example of blockchain's boom and bust cycles. In 2021, the NFT art world exploded in popularity, with digital artworks selling for millions of dollars and artists, celebrities, and collectors alike flocking to this new medium. Platforms like OpenSea, the largest NFT marketplace, facilitated billions of dollars in transactions, creating a frenzy of speculation and FOMO, fear of missing out, that drove prices to unsustainable levels. However, as with Axie Infinity, the NFT art bubble eventually burst, leaving many collectors holding digital assets that had lost a significant portion of their value. The landscape of blockchain fraud is constantly evolving, requiring users to stay updated on the latest threats and best practices for security. By understanding the various tactics used by scammers, users can better protect themselves and their investments in the decentralized world. Can blockchain ever be truly safe? The challenge of security in a decentralized world. The security of blockchain technology is a complex and nuanced issue, often oversimplified in both its praise and its criticism. While the underlying cryptographic principles of blockchain are generally considered to be secure, the technology's implementation and its interaction with the human world introduce numerous vulnerabilities that malicious actors can exploit. Achieving true security in a decentralized environment requires a multifaceted approach that addresses not only the technical aspects but also the human factors that contribute to vulnerabilities. One of the fundamental challenges in securing blockchain systems is the reliance on private keys. These keys, which grant users access to their cryptocurrency wallets and the ability to authorize transactions, are the digital equivalent of a master password. If a private key is lost or stolen, the corresponding funds are irretrievably lost. This unforgiving nature of blockchain security places a significant burden on users to protect their private keys with the utmost care. However, human error, negligence, and the ever-present threat of phishing attacks and malware make it a constant challenge to keep private keys secure. The decentralized nature of blockchain technology, while one of its defining features, also creates challenges for security. The lack of a central authority responsible for overseeing and securing the network means that the responsibility for security is distributed among a vast network of participants. While this distributed model can make it difficult for attackers to compromise the entire network, it also means that individual users and applications are responsible for their own security. This can lead to inconsistencies in security practices and create opportunities for attackers to target weaker points in the ecosystem. The rapid pace of innovation in the blockchain space is both a blessing and a curse from a security perspective. While the constant development of new technologies and applications drives progress and expands the possibilities of blockchain, it also introduces new vulnerabilities that attackers can exploit. The challenge lies in balancing the need for innovation with the importance of security, ensuring that new technologies are thoroughly vetted and tested before being deployed on a large scale. Building a truly secure blockchain ecosystem requires a collaborative effort involving developers, users, regulators, and the broader cybersecurity community, all working together to identify and mitigate vulnerabilities and create a more resilient and trustworthy, decentralized future.